And welcome back to WealthWise with me, your host, Jordan Kimmel, and a good friend for decades. It's hard to imagine. It's John Dobosz, the superstar from Forbes newsletters. John, first of all, happy holidays, and thanks so much for joining us.
You've been a great friend since about 2006, and happy holidays, Jordan.
It's amazing we go back that far. So let me just, give you a chance first to boast, and then I want to get into individual ideas. And so I know that the buy right strategy that you do is a repeatable process. You're not a long-term investor in there. You're looking to generate income. Without blowing the wheels off the car, share what the returns have been cumulative for the year so far.
Well, we've
If
been
there's a
doing it
number like
since
that.
we've been doing it since March of 2014, okay? And we have closed out of 2,060 trades that involve selling puts to start with or buying the stock and selling call options against it, a buy right. And so of those 2,060 closed trades, we've had an average total return per trade of 7.3%, average annualized return of 36%. To annualize a return, multiply by 365 and divide by the number of days in the trade. It's a gauge of how effectively you're using your money, because you could leave it in the stock market long term, you're going to make 12%, 10%, something like that, depending on what your portfolio is made up of. So we shoot for higher, and we get higher. Year to date, we're just about the same. It's been a
Fabulous.
very good year. There's been volatility along the way, which means you get higher
Yes.
options premiums. But for us, there is no more beautiful thing in the market than to be engaged for about 6 weeks and earn 5% over that period. Because that means over that 6 weeks, you've got multiply that by six, and you're doing quite well in the market that year.
A
So
100%. So you know what makes me laugh? The returns are fabulous. I mean, not good, they're fabulous. I could hear some people saying, John, this is taxable. And I'm saying, let's
it's
let's feed the government. Let's feed the government, pay the taxes, and net of fees and taxes, you're coming out way ahead. So I love your strategy. What I want to ask you here for a minute, just so people could, understand the concept of buy right a little further. Do you have to be, or are you usually bullish on the underlying security and then generating income around it? Maybe you want to share that. If something's not bullish for you, probably look for a better setup, right?
That's right. I mean, what we look for are stocks that we have a view of neutral to bullish on. In other words, you don't want to get into something that's going to be down 5, 10, 15% in a few days. My motto is get into the stocks, use the stocks for these trades that you wouldn't mind owning for the longer term, because sometimes you will. We just had an example today, AT&T. Okay, AT&T has been through the ringer, but for the past few months, if you pull up a chart of T, you're going to see it's looking beautifully bullish. It's going to
Looks
have
like
an
a
ex-dividend.
.com stock. It really does look great.
AT&T. Yeah, I'm talking about
I'm
AT&T. I
saying
mean,
in the
got
last
out
few
of the
months.
miserable. You're right. They got messed up with the Time Warner Media, which owns CNN and all the Discovery Channel and all that stuff. That's gone now, and they're back to their core business of uh, telephone service. Telephone and cable service, and
Right.
it's a pretty reliable business. We just did a buy right on those guys today. They're trading at about 23.40. You buy the stock at 23.40. You sell a call option that expires on January 17th for about 40 cents. So you're into the stock for the stock price minus what you earn for the option, about 23 bucks. If all goes well, and you earn that dollar on 23 at risk, you're going to be earning 4.34%, 4.38, 4.35% over the next 37 days, which is an annualized return of 365 divided by 37 equals 42.9%. So 18, and that's not even counting the dividend, because the ex-dividend date, although it's not announced yet, it'll be the second week of January. Those call options expire a week later. What sometimes happens is if you're short a call, that gives somebody else the right to buy that stock at that strike price. They might go
Mhm.
ahead and exercise that right and you get sold out of the stock. Yeah, you missed the dividend, but as I illustrated, you're earning a 43%
Well,
basic.
that's not that's a lot better than a sharp stick in the eye, right? And so
Exactly.
let me
So
just go a little further here, and I want to share with the listeners, the viewers, you've been supplying ProInvestor Insights with a monthly idea. I know you're going to supply another one for the edition that's coming out in just a couple days. I want to say we really, really appreciate that. And one question I have for you, and I wonder if you even care or matter much. People talk about the valuation on the entire market or what the indexes are doing or so on. I'm thinking that your focus, your attention is always on scouring and scouting for individual ideas and let other people talk about PE for the market and what the index is doing. You're actually targeting individual shotgun ideas and executing. Am I right?
it, you're absolutely right, but don't think that I don't do the fundamental analysis first, because that's where I come from is, these dividend stocks. That I've got a separate newsletter that has, a dividend portfolio, and I'm looking for things that trade at discounts to their 5-year averages of things like price to sales, earnings, book value, cash flow, EV to EBITDA. So, but you're right. In the short term, what matters is the momentum in the market, the supply and demand, the interaction of buyers and sellers, and that's
Right.
it. The rest of this
The
stuff just makes guys like me comfortable. Like, hey, if the music stops and I can't get a chair, I wouldn't mind hanging on to whatever stock it is because it pays a dividend.
right.
If your timing's wrong, you're still going to get paid to wait for that recovery, and even the crappiest of the crap, like AT&T, eventually come
Not
back.
crap. Not
So
crap.
did well, I guess I have a little bit of a bias again, but Gap, look at Gap, the store, 10 bucks maybe a year ago. I think I don't know where they are, 26 now roughly.
John,
You
Gap is in our facts portfolio.
Good
And
for
that's a
you.
portfolio we select once a year. That the facts portfolio, unlike Magnet, which trades more actively, we rebalance facts once per year. I will admit, when it made the index, January 2, I looked at it and said, really? Uh, and here we are 12 months later, and really,
Sometimes you just got to hold the nose and go in there. But then again, just because a stock has fallen a lot doesn't mean it can't fall a lot more.
right.
Lots
The
of things,
point, my point here, and I want to get back to you. My point for me is that I didn't pick Gap. The thing is, the model did, and I've learned to trust the model. Fax has been running 13 years already. Matt did for 30, and so it's not a matter of me. I haven't been in a Gap in years. My wife says to me, "Gap, really?" I said, "Oh no, we use
back
the
in like
model."
1998, it was the place to go.
Right, right. So let's get back to you for a second, because here's the point I want to drive home. People are just inundated with data and facts and nonsense, and their head spins because they're trying to figure out: are we in a recession? Are we in a growth market? What's the Fed going to do? What I was saying earlier, not that you don't care about the fundamentals, because you dive deeply into the individual stocks that you're putting in your portfolio,
It's already
but
baked in. It's baked in.
you're not distracted by the noise that distracts too many people and keeps them sitting on their hands, waiting for something. You spot an opportunity, individual opportunity. You don't care less when the Fed meets next. Your idea sets up properly. Am I right?
Yeah, you're absolutely right. And I think a lot of the data, a lot of the earnings results get baked in quicker than we can, fill a glass with water. So, I mean, really, it's the case. So there's people like Dan Sullivan. I don't know if you the chartist,
I
or
know, Dan. Yeah, yeah.
yeah, all guys like that, or any of the McGee, the great technical analysts of the day. Um, they would say it doesn't even really matter. Look at Bitcoin, the latest example. Can you really? Yeah, I mean, people can make fundamental cases for the supply and demand of Bitcoin, and I guess that's probably the most relevant one. Um,
Right.
By the way,
So John, you're gonna
IBI.
rub it in. You're gonna rub it in on me that I still haven't bought Bitcoin. You're just gonna rub that in on me.
Just started doing it, but I love it so far. I sent you guys a trade a couple of weeks ago involving buying protective puts. So
Right?
you bought the IBIT and you sold call options $2 higher than the current price, and you bought put options below it. That's going to expire this Friday, and it's going to expire unless tomorrow's the next 2 days are really bad. We're going to have it expire, and we're going to get called away, and we're going to earn about that 36% annualized
Look,
on
you did it
IBIT.
again. All I could say is the consistency of your swing, the consistency of the research. And by the way, John, I'm not over promoting you because no one gets it right all the time. It's a
No,
matter of just, even I know we both love baseball. You make it into the actual Hall of Fame, making out 7 out of 10 times. You don't really make a lot of money in the market making out 7 out of 10 times, but I know we have we have you as a contributor, John. We've actually curated everyone I've known, and Over My Shoulders, the Magnet Investing original book. What I set out to do was to reach out to different styles, different abilities. We came to the growth, value, momentum. What I love about what you do, it's generating income in a fairly conservative way. We're not saying you're not taking risks because you do, but all I want to say is congratulations on an unbelievable run with Forbes, with an unbelievable another year you're having. I want to talk to you privately about a portfolio I'm managing, where we're going to do covered rights against the S&P on the underlying portfolio. It's a very popular strategy right now. We're using our best stocks to do that. I'm not that good on covered rights. I happen to know an expert that does. So I'm going to reach out to you. What I want to
look
do is
forward to it.
we are running out of time here. So I'm going to give you one last chance. If there's anything you wanted to mention that I forgot, and I value our relationship, and man, I just admire your hard work and discipline.
Thanks, buddy. Back at you. I really appreciate those words. Yeah, Forbes is shutting down its investment newsletter division. So if you're going to find me next year in 2025, it won't be there. But check out dividend dash investor.com. That's dividend-investor.com, and we can still be
Okay.
friends.
Well, we're going to stay close to you. Please send regards to the team over there. I've had a long relationship with the team. It's a great brand. And just again, congratulations to you. Happy, healthy holidays. And John, we'll look forward to your next article. But more importantly, I'm looking forward to my next conversation with you. Thanks for your time again today.
Thanks, Jordan. Happy holidays.
All righty. Signing off, it's Jordan Kimmel. Great episode of WealthWise. John Dobosz from Forbes. We'll see him, I'm sure, with another uniform really soon. And we look forward to your new uniform. That's what happens in sports. That's what happens in business. We'll catch you soon. Happy holidays again.
Look at Juan Soto.
All righty. Talk to you soon. Bye-bye now.
See you, buddy.